Hi, everybody. This is Gary Dean, and this is our another video report for Wednesday, October 5th, 2016. Sorry I'm getting this out a little bit late. Went to my niece's soccer game, so let's get started. The Bulls tried to give it a go today. I'm not really quite sure what the overall bullishness was about. Like, there was no news or anything that sparked it, but it, we saw some momentum picked up. And what I had said in the morning notes was that if they can take out this pivot at the that 2153 level, that most likely it's going to have a reaction trade to the 61 and then possibly up to the 67. So it made it a little bit in between there. It made it to the 61. Started selling off towards the end of the day. To me, I don't really buy into these moves ahead of important economic data like we have coming on Friday. To me, they're just kind of manipulating the tape to get the week longs to close or the week shorts to close, and then they'll bring it back down and get the week longs. And by the time the news comes out, everybody's out of the market already. So I don't really buy into these too much. Yeah, maybe they try it tomorrow to run higher. To me, it doesn't, it's kind of one of those situations where you're at a poker table and you're looking at somebody pushing in all their chips and you're sitting there saying, no, you don't have anything. They can do whatever they want with the tape going into Friday, and however the algorithms are programmed, that's what's going to happen. So they can run it up another 10 tomorrow, and the non-farm payroll numbers come out, and they have their algorithms triggered to sell, and the S&P drops 50 points. It's just the way this works. So I don't really buy too much into the move yesterday or today. Yesterday it had a little bit more to do with the news that kind of brought it down. Had to do with Deutsche Bank, but it wasn't really anything that materialized, and I really don't know if it's even news. I think they're just trying to scare people, because I don't believe that any major bank are too big to fail, like Deutsche Bank. They're not going to be allowed to fail. We're just too intertwined together with our banking system, and who has whatever swaps that the other person has, and they go back and forth. So no, they're not going to let anything happen to it. So it's just a scare shoot. So maybe yesterday's decline was to scare out some of the longs. Today was to scare out the shorts, and it's all going to be a whole bunch of nothing going into Friday, and then we're going to pick the real direction. So the one important note is that you can see that we broke through the triangle. Now we're starting to come back into it again. So maybe they're going to try to form a descending triangle. Whatever it is, they haven't gotten above the upper end of it. So the bears still have control, because you can see that, we had the high, we came down, made a high, but it was lower than this, which was lower than this, which was lower than this. So we're making a series of lower highs, and we are, kind of just stuck in this area right here. When we go down, we're finding buyers. So either it's going to break to the upside or it's going to break to the downside. But the reason why I'm, not really believing that much that we're going to be breaking out to the upside is because no matter what even happens tomorrow, we still have the elections that are coming within, 4 weeks away. So it's not, there's nothing that's going to really be pressing the bulls to get into this market. So we didn't have any bullish or bearish divergences, so we're kind of running just on where we are in momentum, which is neutral, so it's not giving us a whole bunch of information. But the daily chart has the bearish divergences, and it also has this bearish pattern, which we hit the bottom of it, and instead of coming up and hitting the top, we came back down and hit the bottom. So to me, it's telling me that the things are starting to weaken up a little bit. Still plenty of room to get into the deeply oversold levels. But again, we need to see the bears take it through that 2140 to get a reaction trade down to that 2120 level. 15-minute chart, stuck within the first resistance and the first support. It was trading below the moving averages, popped above it. So it looks like they may be trying to hold it, but you can already see we have bearish divergences that are forming on the 15-minute chart, and we are pretty overbought right now. And remember that this was the bullish divergence from yesterday. So they're continued to just work off of the short-term time periods as far as what resistance and overbought and oversold. And that makes things really, really, really hard because you are not getting any clear information on a 60-minute chart, which could be a swing trade, and everything that's going on is happening within a day or two. So if anybody that tries to hold it in this area, you're pretty much just stuck. You haven't really gone anywhere. You have to be really, really quick with your trades. When you have profit, you take them, and it doesn't make a difference if it's on the long side or the short side. You just have to take profits until we break out of this range, and right now we have not broken out of it. So I wouldn't be surprised to see this gap close tomorrow. If they go up tomorrow, then they're going to close this gap first and then still probably end up coming down and closing these other ones. So I remain still looking for a short side trade as far as, I wouldn't really be buying dips right now. I'd be shorting rallies. If they take it above the 2163, then you want to watch this 2167 and then the 2172. So these would be your areas to short, and then just put a stop above there. On the downside, if the bears push it through this, let's say this 2155, we're coming right back down to the 2144, and if it breaks through this, that's when we're going lower than that. So right now we're kind of on hold. Let's see what plays out tomorrow, and have a great night, and I'll talk to you guys tomorrow.